Good evening, ladies and gentlemen. Welcome back to Rainbow Investing, where we examine a spectrum of ideas to improve your long-term wealth. Now, in this video, we are going to look at what I consider to be the best Vanguard ETF for this 2020 stock market crash. That despite the market's recent good run, I don't believe we're quite out of just yet. Now, this particular ETF is managed by Vanguard, one of the largest and most popular ETF providers in the world. It is known for its non-profit model and also for its legendary founder, Jack Bogle, who sadly is no longer with us. The ETF is a US listed fund, but for anyone who's not American, don't worry, I'll be discussing some international alternatives later, so make sure you stick around for those. But just before we get going, I would really appreciate it if you could hit the like button. It really helps my channel out and helps this video get seen by more people. So if you find this video interesting, it's a very small and easy way to thank me. And if you haven't already, I would also invite you to subscribe for videos on personal finance and investing with a positive attitude. So if that sounds like your cup of tea, I would love to have you as a subscriber. But now that's all out of the way, let's get into it. So the stock market crash and subsequent bear market and subsequent bull market we have seen over the last 3 months was initially defined by one of the most brutal and rapid falls in the value of global markets in history, despite its strong recent recovery. We have seen more severe crashes before, like the Great Depression and the global financial crisis, but both of these took far longer to reach the levels of stock market declines we saw in March. Just to illustrate, between mid-February and mid-March, the Dow Jones Industrial Average fell around 37% from its record high. Now, during the GFC, the markets fell over 50%, but this was over an 18-month period. It's only been 2.5 months since the start of this 2020 crash. Some food for thought there. Now, many investors out there would be extremely worried about what's happening in the markets right now. Uncertainty is still extremely high due to that global issue we're not allowed to talk here on YouTube. The reason why the markets have been so volatile is because no one has any idea how long this economic shutdown is going to last around the world. As such, businesses around the world are in hibernation. We won't know how much of an economic impact this is going to have really on any company until this global issue passes. Now, because of this, many people are not sure if now is the best time to invest, which companies to be investing in, or whether to be investing at all. But I think I've found an ETF from Vanguard that solves these questions for the nervous investor today. And it's the Vanguard Consumer Staples ETF, ticker symbol VDC. So, why consumer staples, guys? Well, if there's one thing that this 2020 crisis has made clear, is the importance that people place on the essentials of life. Food, drinks and household items like toilet paper, paper towels, soap, hand sanitizer. These products have all dominated news cycles as people flock to buy them. These kind of goods are collectively known as consumer staples because of their essential nature. It also includes alcohol and tobacco. And the companies that make them are called consumer staple stocks. And this Vanguard ETF holds only these companies, only the companies that make these goods. Rain, hail or shine, boom, bust or doom, these are the kinds of companies we'll always need, and this makes them the kinds of companies that can help keep your portfolios safe if the stock market does have a double-dip crash in 2020. So let's have a look at how this ETF is actually structured. VDC currently holds 92 US listed stocks in the consumer staples sector. The fund has a total net asset value of $5.3 billion US dollars and an expense ratio of 0.1%, which I think is relatively cheap compared to other ETFs, like most Vanguard funds are. So, for VDC, the top 10 stocks are as follows. Procter & Gamble, as you can see, comes in at the top spot. Procter & Gamble is one of the most ubiquitous companies in the world, making everything from Gillette razors to Tide laundry detergent and Pantene shampoo. Procter & Gamble is followed by soft drink companies Coca-Cola and PepsiCo, with some of the most famous soft drink and snack food brands like Coke, Sprite, Fanta, Mountain Dew and Frito-Lays. Next we have retailers Walmart and Costco, followed by the tobacco giant Philip Morris International. Then we have Mondelez, the maker of Oreos, Cadbury and Toblerone chocolate. Then we have Marlboro owner Altria, followed by the toothpaste and cleaning company Colgate-Palmolive, which again I'm sure is familiar with almost everyone watching. And finally we have paper company Kimberly-Clark, which owns the Kleenex brand of tissues and toilet paper. So these 10 stocks here comprise 66.5% of the total fund's value. So you can see how heavily this fund is weighted in the companies that make everyday essentials. So that's the top 10, but I'll also throw in some other names you'll probably know. We have cleaning products maker Clorox, cereal king Kellogg's, which is famous for cornflakes, Fruit Loops, Rice Bubbles and Cocoa Pops. So I'm sure everyone has heard of at least one of those cereals. Kraft Heinz is here, as well as the Campbell's Soup Company. And finally we have Beyond Meat makes an appearance, a fun fact for anyone who's been following that particular stock. So here is how this ETF is positioned towards the various sectors that it consists of. As you can see, household products, soft drinks, and packaged foods and meats make up the lion's share of the holdings. So this ETF might be a strong one to hold in an uncertain market like the one I would describe us as being in right now. But let's have a look at its long-term performance. Now the first thing to say is that this ETF will not make you rich overnight. It's a deliberately conservative option designed for stability and consistency over high growth and speculation. As you can see, there are some solid, if not spectacular numbers here. Note that the ETF is only down 2.7% over the past year, compared with the S&P 500, which is down 5.88% over the same period. This tells me that the ETF is fulfilling its purpose as a defensive holding. But another reason why VDC, this Vanguard ETF, might appeal to investors in 2020 is its dividend payments. Seeing as most of VDC's holdings are dividend-paying stocks, this ETF gives you a weighted average of all these dividends. Over the last 12 months, VDC has a trailing dividend yield of 2.59% and an annualized 30-day trailing yield of 2.93%, both of which are higher than the S&P 500's current trailing yield of 2.27%. So, now we have a fair grasp of VDC, let's examine some options for those investors who live outside the US. So, now we have a fair grasp of VDC, let's examine some options for those investors who live outside the United States. So unfortunately this is not a Vanguard ETF that Vanguard has made available worldwide, unlike some of its larger funds like VOO. But fortunately, another large ETF provider with a consumer staples fund has. I'm of course talking about BlackRock here. So BlackRock is famous for its iShares ETFs, and fortunately there is an iShares Consumer Staples ETF as well. It is very similar in structure and philosophy to VDC, but also includes consumer staples companies from outside the United States, like Nestle, Reckitt Benckiser, and Diageo. So in the US, the iShares Global Consumer Staples ETF goes with the ticker symbol KXI. In Australia, you can find this same ETF under the ticker symbol IXI. Yep, it's listed on the Australian Stock Exchange and is easily available to add to your portfolio if you so wish through your normal broker. Now in Canada, there is a similar fund under the ticker symbol XST. While over in the UK, you can find it with the ticker code WCSS. Again, these aren't the same funds as the VDC Vanguard fund, but they're very similar in nature, holdings and philosophy, so I wouldn't be too concerned about that. Well, there you have it guys, VDC, the Vanguard Consumer Staples ETF. What I would consider to be the best ETF to buy and hold in 2020 in these uncertain times for investors that might be a little nervous about the markets. Thank you so much for watching, I really appreciate it. Remember, if you found this video useful, please consider just hitting the like button or subscribing if you haven't already. It really helps my channel out. I'll be back with some more videos soon, of course, but for now, good night.